Should you lease or should you buy? This is a question that you may be asking yourself if you're someone who is in the market for a car. And while if you've seen my channel before, you know that in about 99% of cases, I think buying a car makes significantly more sense than leasing. I wanted to take my personal opinion out of the equation, and I wanted to answer this question of in 2025, does leasing make sense or does buying make sense purely based off of the data and the numbers? And what actually makes the most sense financially? But before we dive into that, let me address the quick elephant in the room, and that is this hat. No, it is not winter. Yes, I live in Dallas, Texas. It is mid-June, and no, I did not film this video months ago. My straightener broke this morning. So I decided to wear a hat, though it is an abnormally nice day out in Dallas. But I digress. Back to the lease discussion, and I wanted to demonstrate this with a real-life example, and for this video, we'll do this with a Honda CR-V. And the reason why I chose a CR-V is because sales are growing with the CR-V, and in 2024, the CR-V sold over 400,000 units, the most units Honda has seen from a singular model in decades. Not only that, but Honda is the most popular brand to lease, and the CR-V is the most popular car leased under the Honda brand. Let's first go over the facts of what leasing is versus what buying is, and some of the misconceptions associated with both. Buying a car is, well, buying a car. It's when you go to a dealership, you buy a car, and then it's yours. You're kind of stuck with it until you sell it. You're responsible for the depreciation, car payments, upkeep, and repairs. While leasing, on the other hand, is essentially like a rental. You get it from a dealer with a set term and monthly payment, but once that term is over, you return the car or you have the option to buy the lease. But when it comes to leasing versus buying, there are a few common beliefs. With buying a vehicle, some of the common misconceptions are that used cars are unreliable, and thus if you want a car that will have no issues, you must buy new. That's just simply not true, and there are a ton of instances of used cars that are incredibly reliable. In some cases, depending on the make and model, can be even more reliable than newer cars. Additionally is the issue of resale value. When buying a car, most car buyers expect depreciation as an unavoidable cost of buying a vehicle. But depending on what car you buy, how much you pay for it, you can actually mitigate or in some cases completely avoid depreciation. Losing tens of thousands of dollars on a car that you purchase shouldn't be accepted as norm, and there are a ton of different ways to avoid this. While on the flip side, when it comes to leasing, a common misconception is that you aren't charged interest. Leases have something called a money factor built in, which is essentially interest. And so while a car salesman may want to convince you that if you lease a vehicle versus if you buy, you're not going to be paying that interest on that vehicle, which could be a particularly attractive option if you are someone with a bad credit score, the reality is you're never going to get away from interest and you're going to be paying it one way or another. It's just a matter of what it's labeled as. Same goes for depreciation. Depreciation is also taken into account with a lease. However, not so much a misconception, but rather a fact about leasing is the tax benefits. When you lease a vehicle, unlike when you buy a car, you can write off the entire lease payment from your taxes. So for example, if you have a $500 lease payment, that entire payment can reduce your taxable income. However, if you were to buy a car that had a $500 monthly payment, you would not be able to deduct that entire payment from your taxes. So deductions for leases versus taxes are very different, and this is where there can be a big benefit to doing a lease depending on your financial situation and whether you own a business or not. For this reason, a lot of business owners choose to lease instead of buy. There is also a benefit of leasing in the case of electric vehicles because leasing an electric vehicle gives you more access to the EV tax credit. This is something that does look as though it could be going away under the Trump administration, so it's not something I'm going to dive deep into in this video. But it is something that I do encourage you to look into if getting the EV tax credit and leasing is something that you're wanting to look into. But enough of this, let's get into the numbers. Now, when you're looking into a lease, there are a few terms and figures that you should absolutely know. First is the MSRP of the car, or how much does the car cost? Next is the lease term, so how long are you going to be stuck with this car once you sign that lease? And more importantly, how long are you going to be on the hook for those payments? The amount of mileage that you're allotted for that lease term, because you have to make sure to stay within that or else you're going to be charged extra. And of course, your monthly payment. And of course, the residual value of the car after your lease term, which is particularly important if you're someone who is looking to buy the car after your lease term is over. So in the case of the Honda CR-V specifically, the LX two-wheel drive trim, which is a lower end trim for the CR-V, this car has a starting MSRP of $30,900, a 36-month term with a $15,000 a year mileage cap. With this deal, Honda would require $3,116 due at signing. Your monthly payment would be $501 per month, and for that 36-month term, the total amount that you would pay in payments comes out to $18,036. Once you take into account the money that you put down, you're paying in total $21,152 at the end of the lease term. Now, this is the amount that you would pay if you were someone who just wanted to walk away from your leased car after the lease term ended. This would mean that you would pay the $21,152 over the course of that 36 months, and then once that lease term is over, you would simply take the car to the dealership, you would wipe your hands clean, and you would go choose a different vehicle. This is also assuming that there are no additional fees on top of this, like mileage, for example. However, as I alluded to a moment ago, whenever you sign a lease, you do often have the option to buy that lease back. This is basically saying that at the end of the lease term, you actually want to keep that car and you want to buy it instead of returning it. This is where residual value comes into play. Now, residual value is going to vary from vehicle to vehicle, and while doing research for this video, the average residual value for a Honda is about 60%. And so for the sake of this video, we're going to go with the 60% figure. However, with a CR-V specifically, because they hold their value quite well, I wouldn't be surprised if you would have to pay a higher residual value, something closer to 65 to 70%, to account for that lower depreciation that the CR-V typically sees. But again, we're going to stick to 60% for the purpose of this video. And so the residual value of the Honda CR-V is about 60%, which, as I mentioned, again, is the average residual value you'll typically see with a Honda, which places the value of the CR-V at the end of the lease term at $18,552. This means that with this lease deal, if you decided to buy the car, you'd be paying in total $39,704. This is the total amount that you would pay if you had a 3-year lease and then at the end of the lease deal, you bought that Honda CR-V. But there is one piece of the equation that people oftentimes don't take into account whenever they're making these types of videos, and that is the fact that that final residual value payment is very rarely paid for in cash. And typically what you will see is a person who does a lease, buys that lease back, they are then taking out a second loan for that residual value payment. And so in the case of this $18,552 payout, they're not going to be paying for cash for that. They're going to be taking a loan, which of course is going to have interest applied. And there's also going to be tax, title, and licensing that is also applied to this as well. Which means that after TT&L and interest financing, this $18,522 payout quickly becomes $25,000 once everything is taken into account, which takes that $39,000 CR-V closer to a $45,000 CR-V, making it significantly more expensive. Now that's for leasing. Now let's take a look at buying. Now, whenever we spoke about leasing, I based the payments off of someone with very good credit. And so for buying, we're going to do the same thing, and we will also take into account the same down payment. So for this Honda CR-V LX, the car costs $30,900. We finance it for 60 months at a rate of 5.18%, and we put $3,114 down. And of course, we're having to take into account tax, title, and licensing. This puts the monthly payment at $544.19. And it means that at the end of the loan, you'll be paying $38,844.28, slightly less than what you pay with a lease. But of course, we have to look at this from the flip side of the coin with buying as well, because the reality of the situation is most people who buy a car are not going to keep that car until the wheels fall off, and they are most likely going to sell that car at between the 3 to 5 year ownership mark. In fact, the average age of a used car in the car market is about 3 years, which means that most people get rid of their cars at this point. At 3 years, this car has retained 74.6% of its value according to depreciation charts, which places this car's value at $23,008. And based on the loan figure we used for the loan, you'd still owe $11,982.39 at that 3 year mark, which means that at the 3 year mark of ownership, your loan would have cost you $19,319.43. That's the total amount that you would have paid up until that point. But because of the fact that you had positive equity in this Honda CR-V, you'd actually get $11,025 back whenever you sold the car, making the real cost of ownership of this car $8,294 over the course of that 3 year period of time, making buying a car, even in the case that you sell that car at the 3 year mark, a much better and more attractive option. Now, this is just one scenario of the CR-V specifically with an excellent credit score borrower using average numbers. And of course, the outcome of this exercise will vary greatly depending on what car you're talking about, how much you potentially put down, your credit score, as well as your terms. Also, the depreciation rate of a car will dramatically affect these numbers as well. For example, if you were to buy something like a brand new Lincoln Navigator, that figure is going to have dramatically different numbers for a buy versus a lease. And those figures are going to be dramatically different than this exercise we did with the CR-V. But in most cases, for your average buyer, at least in this car climate, it's going to make more sense to buy instead of leasing. But of course, the situation changes dramatically if taxes and lowering your taxable income is on your mind, in which case leasing actually could make more sense. There are also ways to go about creative leasing, where you can actually lease a car and you kind of have the same terms as buying, but you have the tax benefits of leasing. This is oftentimes done with private banks and private companies, and it is something that I could talk about in another video if there is interest. But the unfortunate reality is that leasing hasn't always been as unattractive as it is today. And for a long time, leasing was actually a pretty decent way to go about building your credit, getting into a more expensive car at a lower price, and it was kind of the no-brainer option for business owners specifically looking for the tax advantage. But ever since the pandemic, leasing has become increasingly more and more expensive, and thus less sensible. Like always, you guys, I hope that you enjoyed this video. If you have any questions, comments, if you have anything to add, I would love to hear it. So make sure to leave a comment down below. And while you guys are at it, make sure to hit the like button, hit that subscribe button, and hit that notification bell. And I will see you guys in the next video.